Hello, this video is going to explain some of the things to expect for markets and currency depending on the outcome of this election. I am not trying to predict which candidate will win or to influence voters in any way. I am simply looking at historical data to inform investors about what could be expected depending on various outcomes. I made a similar video prior to the Canadian federal election stating that a Liberal victory generally leads to the Canadian dollar depreciating versus the US dollar at least 10%. So we would likely see this outcome again as the Liberals were ahead in the polls. It only took a couple of months for this prediction to come true, as the exchange pair went from an already elevated $1.30 Canadian to $1 US to as high as $1.46 Canadian for $1 US. Of course, there are other factors at play, but the historical pattern held true once again. While we're talking currency, let's see what the US data has to show. The Democrats, which are liberals, are represented by blue, while the Republicans, which are conservatives, are represented by red. This is the opposite of the usual color associations elsewhere in the world, so hopefully that won't confuse anyone. As you can see from this US dollar index chart, the US dollar tends to trade in a narrow range during most Democratic presidencies, while spiking near the end of their reign. While during most Republican presidencies, the dollar usually peaks earlier and then declines heavily over the rest of the reign. This has held true in every single case since the late 1960s. We all know the US dollar has strengthened recently versus global currencies, and if history holds true, it would likely fall in the longer term should a Republican win the presidency. Interestingly to note, the US has been alternating between Republican and Democratic two-term presidents recently. So if this trend continues, a two-term Republican would be due up next. As for the stock markets, people generally think conservatives are better for business and markets. But as I learned when making my Canadian video, as well as this US video, markets actually perform better during Democratic or Liberal reigns. Once again, there are other factors to consider, not the least of which would be the prior government, and the fact that conservative governments were in office during the worst of times such as the 1980s oil glut, the dot-com bubble, and the beginning of the recent financial crisis. Nonetheless, according to S&P Capital, Democratic presidents return an average of 9.7% for markets, while Republican presidents return 6.7%. Getting more specific, a Democratic president provides the greatest returns with a split Congress, or, more recently, with a unified Republican Congress, while a Republican president provides the greatest returns with a unified Republican Congress. Therefore, with a Republican unified Congress, expect good market returns no matter who wins the presidency. But with a split Congress or Democratic Congress, then don't expect much in the way of market returns if the president is a Republican. To finish off, I'll take a brief look at the top individual candidates. Bernie Sanders wants to break up the large financial institutions, raise taxes on the wealthy and businesses, including dividends, capital gains, and healthcare premiums, while spending to expand Medicare and cut or eliminate tuition debts. A financial transaction tax would combat high-frequency trading and equity speculation, but would likely also affect smaller retail investors. A much higher minimum wage would have the greatest negative impact on corporate profits and unemployment. His ideas are obviously the farthest left and socialist, which would be tough to implement in America, but if successful would have the greatest negative impacts on business and markets. Hillary Clinton has made her stance against drug price gouging a key point in her platform, and some pharmaceutical companies, such as Valiant, have suffered already on this talk. She is also looking to raise the short-term capital gains tax above $400,000, which would likely only affect a small portion of wealthy traders, but could reduce a bit of market volatility, as it would encourage longer holds. Raising spending on infrastructure would benefit companies in these areas, while cutting tax loopholes on foreign corporate profits would negatively affect many of the largest U.S. corporations. Raising the minimum wage would be expected to lead to lower corporate profits and higher unemployment. Some of her policies, if successful, would hurt big business and markets, but they would target mostly the wealthy and largest corporations. Ted Cruz is against the minimum wage increase, so it would be the status quo in that sense. He is opposed to raising the debt ceiling, which, unless he can maintain a balanced budget, is not possible without causing a major economic collapse. Therefore, some spending cuts would be necessary. Eliminating corporate tax and having one standard income tax level would definitely benefit individual and corporate wealth, but the reduced revenue would make balancing the budget seem very difficult. Also, his proposed consumption tax would actually discourage consumer spending, which is not good for any economy. Reducing federal regulation of the energy sector would likely hurt renewable energy and help the traditional fossil fuel companies. Marco Rubio would like to eliminate the deficit and balance the budget, which would again require some spending cuts in certain areas, and he wishes to freeze spending at 2008 levels for everything except defense. Only 2 personal income tax brackets and 1 low corporate tax rate would help individuals, businesses, and markets. Ending inheritance, dividend, and capital gains taxes would definitely lead to more invested dollars in markets, which would be expected to provide the greatest boost to markets. Donald Trump is obviously a wild card who would want to keep more protectionist policies. That would likely hurt exports and a lot of foreign relations. Fewer tax brackets and lower taxes for most Americans would likely lead to more investment. Cutting government spending would hurt companies in these sectors affected by the cuts, but lower corporate taxes would benefit businesses and markets. Now, this is not meant to influence voters in any way. These are simply predictions based on past data and platforms and do not guarantee in any way future outcomes or returns. I hope you enjoyed this video, and I have many other political and investing videos, so please share and subscribe to my YouTube channel. You can follow me on Facebook and Twitter, and I also have a premium member service where I provide daily emails previewing overall markets, top news items, and day trading stocks to watch, databases of US, Canadian, and foreign stocks and ETFs broken down by sector with key metrics, daily upgrades and downgrades tracked with performance, a customized editable options calculator, and a Facebook chat to connect with myself and other members. Thank you for watching.